Bitcoin exchange inflows since 2018 put potential 20K bottom at risk. As Bitcoin exchange inflows spiked to almost 3.5-year highs, the cryptocurrency could be on the verge of a major retail sell-off. Data from on-chain analytics platform CryptoQuant shows users of 21 major exchanges sending coins to their wallets en masse on June 14th. As BTC/USD fell to lows of $20,800, traders appeared to become panicky, and despite a reversal that at one point topped $23,000, few seemed willing to trust that the worst was over. Since then, spot price action has returned to near $21,000, while 24-hour exchange inflows reach 59,376 BTC. According to CryptoQuant data, this is the largest daily inflow since November 30th, 2018. On that day, exchanges recorded 83,481 Bitcoin of net inflows. May 9th, 2022 ended with 29,082 BTC in net inflows for the platforms monitored by CryptoQuant. More selling pressure may emerge in Bitcoin markets in the coming days and weeks. In 2018, after a month of increased selling pressure, BTC/USD hit its lowest point of $3,100, 84% below its prior all-time high of $20,000. As Cointelegraph reported, analysts are divided in their opinion as to whether Bitcoin will repeat the trend this cycle. An 84% drawdown would mean a bottom of just $11,000. In a separate analysis of the price situation, statistician Willy Woo concluded that macro market movements would dictate Bitcoin's bottom. Wu said in a Twitter thread that he thinks it's simpler than this. We'll find a bottom when macro markets stabilize. In his analysis of who has been selling so far, CryptoQuant CEO Ki-Young Ju pointed to derivatives traders and Binance, the largest global exchange. According to Ki, the largest number of coin days destroyed came from specific venues. He wrote in a Twitter thread on June 13th that the selling pressure came from Binance and FTX. He noted that the exchange inflow coin days destroyed for Binance reached a year high before the drop. Key pointed out that this was in contrast to the behavior of other whales during the recent market turmoil, which began with the implosion of Terra Luna in May. According to data from on-chain analytics resource CoinGlass, there has been a lot of downside bias on FTX in recent days. So where do you guys think Bitcoin's headed? There's a lot of different price predictions out there. Up next here, Brazilian proposal would make crypto payments legal and protect private keys. A proposed modification to an existing Brazilian law would grant Brazilians the right to use cryptocurrency as a means of payment while safeguarding their private keys from seizure by the courts. Federal Deputy Paulo Martins proposed a bill to the country's legislature on June 10th that, if passed, would expand both the legal uses of cryptocurrency in Brazil and the power the courts would have in confiscating it. The proposed addition in Article 835 of the Civil Procedure Code would recognize crypto assets as a financial asset, means of exchange, or payment instrument, and would allow for their use in relation to goods and services or investment. A change in the law would not automatically make Bitcoin or any other cryptocurrency legal tender in the country. However, it would recognize cryptocurrency as a legally recognized financial asset for investment and other purposes. I think that this could be huge. A broad interpretation of the proposal suggests that cryptocurrency such as BTC or ETH could be used to pay for goods and services across the country. It could also be used as a means of payment in the event of offering or forced constriction of crypto assets. The proposal also outlines the new powers and limitations that Brazilian courts would have when crypto assets are recognized as financial assets. These include the ability to freeze exchange accounts. The proposal does not give the court the power to seize users' private keys. According to the proposed plan, debtors would have to send their cryptocurrency payments to the court's wallet in order to ensure its validity. The proposal does not mention how the court would obtain cryptocurrency from self-custodied wallets. For those that keep their crypto on exchanges, the court would have the power to force the exchange to freeze the debtor's crypto assets. The proposed additions are still in the early stages of discussion in the Chamber of Deputies within the country's legislature. This means that it could take several years before the additions are passed by the Senate and signed into law by the president. By that time, they may have changed drastically, right? So there's pros and cons to that. These laws can take a while to institute, and at that point, something totally different could be relevant at the time. So far, only El Salvador and the Central African Republic have recognized Bitcoin as legal tender. Tonga is considering following in their footsteps. Pretty exciting. So we'll keep you guys updated as that article develops as well. Up next here, SEC boss worries crypto bill undermines financial protections. SEC Chair Gary Gensler said that he is concerned that a proposed bill to create a regulatory framework for cryptocurrencies could weaken investor protections in the traditional financial market. During Tuesday's CFO Network Summit, questions were asked of Gensler regarding a recent bill introduced by Senators Cynthia Lummis and Kirsten Gillibrand. Gensler noted that he believes the bill has potential, but more discussion is needed in order to ensure that it is effective. Curious to see how he thinks that would be the case. He responded by saying that they did not want to undermine the protections they had in place in a $100 trillion capital market. He added that they did not want their current stock exchanges, mutual funds, or public companies to inadvertently say that they wanted to be non-compliant with the regime that had been beneficial to investors and economic growth for the past 90 years. The Lummis-Gillibrand Responsible Financial Innovation Act seeks to address many aspects of digital asset regulation, including taxation, stablecoins, and agency jurisdiction. One provision of the bill would give the Commodity Futures Trading Commission, or CFTC, the authority over digital asset spot markets. Gensler has said that most cryptocurrencies are securities subject to the authority of the Securities and Exchange Commission. The senators have largely agreed with Gensler's point, saying that some altcoins would likely fall under the proposed securities law, with Bitcoin and Ether considered commodities. What do you guys think? I'm curious to know, with all this Ripple, XRP, SEC lawsuit, all of these new regulations, is it security? Is it commodity? What is it? What do you guys think? What is your take on that? At the summit, Gensler said that the SEC is not looking to extend its jurisdiction and that some cryptocurrencies may already be under the jurisdiction of the agency if they qualify as being a security. He states that the agency is only looking out for the retail public and that these tokens are being offered to the public with the hope of a better future. Meanwhile, Commissioner Christy Goldsmith-Romero of the CFTC says that she hasn't yet read the Lummis-Gillibrand bill, but she welcomes regulatory action by Congress. Commissioner Goldsmith-Romero made these remarks at an event on Tuesday. Romero, who previously worked as senior counsel in the SEC's Enforcement Division, was asked whether the perception that the CFTC is a more relaxed regulator compared to the SEC is accurate. Romero stated that the CFTC and SEC have more similarities than differences, saying that both agencies are focused on ensuring rigorous oversight of markets. She went on to add that the CFTC has already taken multiple enforcement actions against entities operating in the crypto space. Romero explained that the CFTC has allowed more cryptocurrency products to trade on its regulated exchanges, with 18 products trading across 11 regulated entities. She went on to say that this experience is helpful as they move forward, but that it will take cooperation and coordination with the SEC. So there you have that. Again, more and more regulation is what they're trying to come up with. We'll see. We'll continue to keep you guys updated as we have more developments on how that is going to work. Up next here, Binance CEO plans to leverage the crypto winter. I think we should all be doing that. CZ Zhao, CEO of Binance, believes that a potential crypto winter could be good for business. In a recent interview, Zhao said that during bear markets, projects with sound fundamentals tend to survive and thrive. He believes that Binance is one of those projects. Binance CEO Changpeng Zhao was recently asked how the company will fare during the current crypto winter in light of reports of recruitment freezes at Gemini and Coinbase. He answered confidently, saying that Binance is well positioned to weather the storm. I agree with that. Any good, solid crypto projects should have put in place. They know how these markets work. They know the bear markets come and can last for months, maybe even years. So being well positioned is a great thing. CZ stated that this is not the first time that they have gone through a cryptocurrency winter. If they are in fact in a crypto winter, this would be the third such winter, with Binance's second. So it is not new territory for them. Changpeng Zhao is recruiting new staff during a bear market in order to take advantage of the next possible bull market. He believes that this is the best time to hire, as during bull markets, everyone is starting their own projects and compensation is much higher. CZ continued, now that the markets are more balanced, so top talents are available and he wants to hire them. The crypto world has been experiencing a period of decline over the past few weeks, but Binance boss Changpeng Zhao still believes that now is an excellent time for companies to expand and hire. Amidst the current market conditions, many cryptocurrency exchanges have been forced to freeze new hires and lay off employees. Companies such as Crypto.com and BlockFi have had to lay off over 5% of their staff, while trading platform Robinhood has axed 9% of its employees since April. Changpeng Zhao recently spoke about the company's spending habits, stating that they have always been very conservative with their expenses. He went on to say that Binance has never sponsored the Super Bowl or purchased stadium rights, unlike some of their competitors. Binance has temporarily paused BTC withdrawals due to a stuck transaction, which has caused a backlog. CZ has confirmed that funds are SAFU and that withdrawals will be resumed soon. So what do you guys think? Do you agree with that? Do you think now is a good time to accumulate as a company, hire more people on, or would you cut down your finances and stay small? Let me know your guys' thoughts. Up next, more on the SEC. They reportedly launched an investigation into insider trading on exchanges. The SEC is reportedly looking into how crypto exchanges are working to prevent insider trading. This probe will help the SEC understand how these exchanges operate and what policies they have in place to discourage insider trading. On June 15th, Fox Business reported that a person with direct knowledge of the SEC's activities said that the commission had sent a letter to a major crypto exchange requesting information about how the platform protects users from insider trading. The source believes the same letter has been sent to multiple exchanges. It remains unclear which exchange or exchanges have received the request for information from the SEC, but according to the news outlet, Coinbase, Binance, FTX, and Crypto.com have all declined to comment. The SEC also declined to confirm the probe. The SEC's inquiry is unclear. It could be seeking leads to litigate against an exchange's potential legal violations, or it could be a routine compliance check. The SEC is investigating allegations of insider trading at OpenSea, the world's largest marketplace for NFTs. According to Cointelegraph, the commission could ultimately label NFTs as securities if it finds evidence that OpenSea's former product manager, Nathaniel Chastain, engaged in insider trading. Jeremy Hogan, a partner at the Hogan & Hogan law firm, told Fox Business that the SEC's current interest in exchanges may stem from the allegations of insider trading on tokens that were scheduled for listing and were likely to see a price gain. Hogan said that the SEC might be forewarning the exchanges about the need to get control of this type of trading. The proposed Digital Commodity Exchange Act of 2022 would see the SEC's presumed jurisdiction over crypto exchanges rescinded. If it passes, the bill would give the Commodity Futures Trading Commission, or the CFTC, authority over crypto exchanges and stablecoin providers. The SEC's decision to start an inquiry may have been catalyzed by current market conditions and scandals in the crypto industry. Last month, the Terra ecosystem collapsed when the Terra USD stablecoin depegged and the Luna cryptocurrency plunged 99.9% in value. Reportedly, the decentralized finance, staking, and lending platform Celsius has come under fire for freezing user withdrawals. This follows rumors of the platform's potential insolvency amid reports of large transfers of cryptocurrency to the FTX exchange. The total cryptocurrency market cap has fallen below $1 trillion for the first time since February 2021, currently standing at $977 billion, a 1.1% drop over the past 24 hours, according to CoinGecko. This might not seem like a lot. I mean, $977 billion still seems like a huge amount of money for the market cap. But for those of you who are very technical, look at the numbers. I mean, that can be scary. So hang tight. We will get through this together. And last but not least here, legal battle avoided after YGG and Merit Circle DAO agree to a deal. The potential legal battle between the Merit Circle Decentralized Autonomous Organizations, DAO, backing company Merit Circle Limited, and Yield Guild Games, or YGG, has been averted after the organizations reached a deal. This follows the DAO's original vote to remove YGG. Merit Circle Limited is a company that created the Merit Circle DAO to help gamers interested in play-to-earn games. The DAO provides items from its treasury to be used for gameplay, as well as delivering educational content. The DAO has proposed a plan to cancel the YGG Simple Agreement for Future Tokens, or SAFT, and refund the initial 175,000 USDC seed contribution. Despite some disagreements, YGG has still made 10 times its initial investment. The MIP 13 proposal, which passed on May 28th, suggested that YGG was not providing sufficient value to the DAO and that it was competing with Merit Circle rather than being a partner. The proposal would allow for the removal of unnecessary members from the DAO to ensure that only those who are committed to the success of Merit Circle remain. It is unclear whether or not the passage of MIP 13 honored the agreement between Merit Circle and YGG, wherein YGG would receive tokens in return for its financial contribution towards Merit Circle. In response to the proposal, YGG stated that the legal authority of the DAO to nullify a contract signed on its behalf by Merit Circle Limited was unclear, and that no condition existed for Merit Circle to cancel the contract, regardless of how this was presented to the community by them. On June 9th, the Merit Circle agreed upon and unanimously passed a counter-proposal with YGG to honor the legal agreement. This netted the guild 1,750,000 USDC, a 10 times return on its original seed investment. On June 14th, both Merit Circle and YGG stated that they were pleased with the outcome of the situation, saying that the solution still satisfies the will of the Merit Circle community, but was also acceptable to YGG. They added that as the original proposal clashed with the prior legal agreement Merit Circle made with YGG, it likely would have been led to legal action. Both parties agreed that setting a precedent like this could be dangerous for the Merit Circle DAO and the cryptocurrency industry as a whole if investors' rights are not respected. Both parties agreed that it would be best to settle the legal question instead of going through a costly and time-consuming legal process with uncertain outcomes. Neither party was required to settle, but both parties chose the constructive path to help Merit Circle move forward. It was announced today that Merit Circle and YGG are ending their formal relationship. Each organization will continue to focus on growing the blockchain gaming ecosystem. Merit Circle will still have the support of YGG moving forward. So that is just some up-to-date crypto news for you. Thank you guys so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.